Yo, what's good, my boys? We big, we strong, we back with another banger. Just got back from the gym. Today, I'm going to be talking to you guys about risk to reward. So, this video is going to be for a little bit more for my newer traders. So, if you already have your system and you are back tested already, you've already know your system, either you're already profitable or you already know how you're going to get profitable, this video probably isn't for you. But if you're someone who's still figuring out what kind of system you're actually trying to build, how you're going to trade, what you're going to trade, what trading style you're going to use, this is the perfect video for you. And this is a video that I wish I stumbled upon in my trading journey. So let's get into this. So first of all, what is risk to reward? Just real quick for my new traders, I'll show you guys this real quick. Risk to reward is basically the ratio between how much your stop loss and your take profit is. So right here we can see my stop loss is, in this case, 109 points or 100 points. Let's just see it. 100-point stop loss, meaning if this stop loss gets hit, I lose money, right? My take profit here, I'm going to drag it to 100 points as well, meaning the ratio of these two things is 1 to 1, right? So what does this look like? If I enter my trade here, it goes like this. Whichever line gets hit first is my win or my loss. And now let me mark out a trade with a 1 to 2 or 1 to 3 risk to reward ratio. So now here, same 100-point stop, for example. This isn't realistic. I would not have a 100-point stop. But here we go. Now 300-point take profit. Therefore, it's a 1 to 3. So that means if I'm risking $100 here, $100 risk, I'll be making 100. Pretty simple. But if I'm here on this trade, again, risking 100, but now what am I doing? Making 3 times what I'm risking, which obviously sounds great. Why? Low risk, high reward. Beautiful, beautiful thing, right? Like, obviously, who doesn't want to risk little to get lots? But, and there's always a but. Trading is one of those things that there is always going to be a but. Oh my god, I'm actually down soon. Oh no, I'm not. I'm sorry. Thought I didn't minimize my camera. The but, of course, is that within trading, that might seem like a less risky setup because you have less risk on the table for a higher opportunity to make money. But because we are playing a game of statistics, this is not actually how it works. It's not less risky because you're risking less. And I can explain this to you. For example, here, right? Let's just say, first thing, something that is very needed to be noted is that this is a chart. I'm going to draw a chart between risk to reward This is the relationship between risk to reward and win rate, right? They're going to be directly inversed. If your risk to reward is going to go up, your win rate is going to go down, and vice versa. If your risk to reward is going to go down, your win rate is going to go up. And why is that? Because of the fact that it is more, in this situation, if price comes up till here and then reverses, that's a loss. But in this situation, at a 1-to-1, that would have happened. So there's going to be a lot more times where it goes only to a 1-to-1 risk to reward, for example, instead of a 1-to-3 risk to reward ratio. So that your win rate is going to go up. So risking less to make more doesn't necessarily mean you're making more money. Like for here, for example, let's just say you trade a 1-to-3 risk to reward ratio, meaning you are trading, you make 3 times as much as you risk per trade with a 50% win rate, okay? Meaning you win 50% of your trades. 50% win rate, right? Okay. So, sorry, I actually was gonna make this. Okay, that doesn't matter. That works out too. Here, we have a 50% win rate, and up here we have 75% win rate because Y won 3 out of 4 trades. At the top, our loss is 500 and our win is 500, meaning what? 1-to-1 risk to reward ratio. 300 and 900 is a 1-to-3. Out of 4 trades, we lost 2, won 2, gives us a 50% win rate, and that leaves us at a total of 1,200, I believe, right? 1,200. If we're down 300, 600, back up 300 plus 900, leaves us at a total of 1,200. So this means that we have a much higher risk to reward here with a lower win rate, but we still end up making less than we would have with a slightly higher win rate, risking the exact same amount per trade as we're targeting. So what does this tell us and how does this help us? This helps us in the way that trading or finding your risk to reward isn't something, there's no right or wrong way to do it. Like, I can't sit here and tell you you should or shouldn't trade this type of way. It's a preference thing. It's going to be about what kind of human being you are and how you handle certain situations within trading. For example, me personally, I was drawn between 2 aspects of it. I'm somebody, I like to know mentally I have room for error, which isn't good for a low risk to reward trader, because look here, if I had lost this trade plus 500 plus 500, now I lose 500. Actually, I think I didn't do this math properly. I think, wait, 1,500 plus 1,000, it's supposed to be 1,000. But if I had lost one of these winning trades, so we make it plus 500 plus 500 minus 500 minus 500, just one trading difference, literally a difference in one trade, is the difference between $0 and $1,000, right? And it's the same, and that has its own effect in the higher risk to reward, because now, how's it gonna work? You might lose 1 trade in a row, 2 trades in a row. You need that 3rd trade to compensate for everything. So that again is gonna be based on your psychology. What kind of person are you? Is that something that doesn't work well with you? Is that something that stresses you out? Do you get scared by the fact that you're going to have to wait through 2, 3, 4 setups until you find the one that's going to pay you for all of those plus more? Because I know I am. I find it hard to stay mentally in tune with what I'm doing when I'm constantly losing. Even though it's a small base hit on the market, I like to get in the market, get out of the market, and take my profits. Because if I'm constantly winning, if I have a 70, 80% win rate, I have much more confidence going into every single trading day knowing, okay, 7 out of 10 of these days I'm going to win, and the 3 that I don't matter. It doesn't matter. And of course, that was the trade-off that I was willing to make. I was willing to trade off having no room for error and having to only execute those perfect setups so that that one trade can't fuck me. And if it does, that messes me up. That was something I was willing to have more of than I was willing to sit through multiple losses so that the one trade can, build me all the way back up again. But maybe you're different. Maybe you are someone who really feels like individual setups really stress you out. You might make a mistake. You might just take a stupid trade that you shouldn't, and you do it often. And you know that you're also disciplined, patient, and you can sit through losses. So then you should probably trade high risk to reward because you're able to do it. And that's probably what's going to be better for you than to be trading in a way that doesn't allow you to mess up. And that's where you've been lied to. Everybody always has this idea and tells us that either the more we're risking, the less we're risking on a setup to make the less we're risking for the more we're making, the less risky the setup, when that's not true at all. Because if I'm risking 500 to make 500, there's an 8 out of 10 chance that happens, right? You risking 500 to make 1,500, there's a 3 out of 10 chance that happens. But if that 1 or 2 or 3 don't happen, you're fucked. Whereas that could happen to me, but the chances are much slimmer, and I'm also going to be at a point of break even then. So I just don't like that feeling of knowing that when I do mess up, I can't mess up that one trade that's supposed to compensate for everything. I'd rather have base hits that are building themselves up slowly over the market. So you really have to just do a mental analysis of yourself, a mental diagnosis, and really realize, okay, what kind of person are you? Are you somebody who, as I said, is disciplined, is going to sit through losses and not change the way you're trading? Or are you somebody who is worried about that and would prefer to consistently be winning, but one loss can really fuck you up? Because there's trade-offs. Life always has trade-offs. So yeah, boys, I hope that was helpful for you guys, and that's just something to have a think about. Because if you're not trading the right risk to reward for your mental, it's going to be extremely, extremely draining on you. But yeah, boys, that's me for the day. Hope that was helpful. Love you, boys. Appreciate everybody who's popping into these and supporting me. We all gonna be on a Lambo one day, and I'm gonna come back to these videos and I'm gonna be like, yeah, boys, the niggas who commented on them, oh my god.